World Economic Forum annual meeting is concluding today in Davos, Switzerland. Earlier, our senior anchor Alishia Seckam spoke to Nedbank CEO Mike Brown. Let's take a listen.
Over the last few years, there's been a huge amount of focus on banks, banking, regulatory reform, financial services remuneration, and certainly what you see this year is a shift away from that. Quite a lot of focus at this stage on the euro and the eurozone, perhaps a little less than last year. But generally speaking, I think the environment here is much more positive than I've seen for the last 2 to 3 years.
What perspective are you bringing to WEF 2013? Because as you say, the overall tone seems to be a lot more optimistic.
Yeah, I think certainly, what we're here to do is to sell Africa as an investment destination, to talk about our business, to talk about Nedbank and the opportunities for us on the African continent, and generally talk about Africa.
Having weathered the storm relatively unscathed, we've got that label, the basket case that is Africa, being eroded slowly. Certainly the banking arena promoting our regulatory environment as a developing continent, and with that, it's become the crisis of the developed world that's getting people to focus on other parts of the world like Africa. How do we use this to our advantage?
Yeah, so certainly, if you look at the World Economic Forum Global Competitiveness Report, you'll see that in terms of soundness of banks, South Africa is rated number 2 in the world. So there's some very public data out there that talks to the strength of our banking system. I think the way that gets used to our advantage from the banks themselves is to make sure that we continue to have a strong system, that we broaden our access to financial services in South Africa, and that we can use South Africa as a springboard to grow our franchises into the African continent.
Having said that, we've seen the recent credit downgrade on South Africa come through from the ratings agency Fitch, and as a result, our banks being downgraded as well. Your response to that?
Yeah, so certainly in terms of the actual effect on the banks itself, it's minimal. If you look at the sort of gauges, you'll see that there's a slight weakening in the rand, but in fact our bond market actually has strengthened since that. So, certainly I think that government has taken on board what the rating agencies have said, and post Mangaung to get firmly behind the National Development Plan, which I think is a fantastic response to some of the concerns.
Where we've seen the G20 leading the drive on changing banking regulation around the world, what's your view on things like Basel III and the kind of impact that's said to have on banking on the continent?
Yeah, so certainly all the banks in South Africa are in really great shape from a Basel III perspective. We've actually gone live with Basel III from the 1st of January. Many countries in the world haven't done that. But the top countries in the world, like South Africa, Australia and Canada, from a banking perspective, have all gone live. Our capital ratios are all extremely strong, probably around 11% from a core equity tier 1 perspective. So, I think that Basel III in general is a good thing for the banking system. The one aspect that I don't think works is the net stable funding ratios, which are due for implementation in 2019, but I think sense will prevail, and globally there's now a review of those ratios.
Innovation is on the agenda as a catalyst to solving some of the problems that plague the global economy. What ideas are you walking away with?
Yeah, so I think certainly the key ideas from a banking and financial services innovation perspective, I think really are going to, from a retail perspective, occur at the intersect of mobile banking and banking. So I think there's a lot of exciting stuff going on there. And in many ways, what you see happening in the African continent is in fact leading. We're ahead of many of those markets. I think there's a lot of opportunity there. And then I think, generally just the infrastructure opportunity in Africa and the innovative funding mechanisms that are going to be required to finance the infrastructure on the continent.